In 2008, as financial markets collapsed and banks teetered on the edge of failure, the British government stepped in with £500 billion of taxpayer money, with the estimated cost to the taxpayer rising to £1.2 trillion as of March 2010. This was done to save the institutions deemed too big to fail.
That regulation of the banks was not enough, but that there was a moral dilemma at the heart of this banking crisis, in that financial and banking institutions knew that they were too big to fail, and that the taxpayer, whether in the United Kingdom or in any of the other regions of Europe, would always have to help them out, no matter what the crisis.
The public would later face decades of austerity paid for by service cuts and extreme tax hikes to pay for it. Now, let's rewind 187 years. Britain finally abolished slavery throughout its empire in 1833, making the practice illegal, but it came with an extraordinary provision that reveals more about the true motives behind the act. For a stipulation of the abolition was the provision of a gargantuan payout totaling to a staggering 40% of the national GDP. The government provided £20 million, estimated to be worth multiple billions in today's currency, in compensation. This was paid not to the people who had been enslaved, but to the 46,000 slave owners to compensate them for loss of property. Now, aside from the glaring injustice of it all, the parallels should be obvious, eerie, and unsettling. If the crossovers aren't immediately obvious by now, they will become clearer. This is a summary of some notable modern organizations who were direct beneficiaries of the immense and unjust 1833 payout. The data was collated from the UCL Legacies of British Slave Ownership database, which documents all 46,000 compensation claims and their connections to modern institutions. Barclays Bank founder David Barclay, who was involved in the slave trade, did, over time, become a legitimate abolitionist. However, by the time of the 1833 compensation payout, several individuals associated with the bank, particularly its directors and shareholders, were among those who benefited from the compensation scheme for enslaved people on plantations. Founded as Taylors and Lloyds in Birmingham in 1765, the Lloyds banking group merged with the London and Westminster Bank, which had merged with the London Joint Stock Bank, founded by John William Lubbock, who received substantial compensation. Through these mergers, the bank has numerous connections to families who received substantial compensation for slaves. The Royal Bank of Scotland, founded in 1727, had several founders and early directors involved in colonial trade. They went on to acquire Smith, Payne and Smith Bank, which had received substantial slave payment compensation. HSBC acquired the UK's Midland Bank, now HSBC UK. Midland Bank's predecessor institutions, the London Joint Stock Bank, had direct associations with slave compensation. Amongst these were individuals such as George Pollard, the bank's first manager, director Thomas Philpotts, who together were involved in multiple compensation claims related to nearly 1,000 enslaved people enslaved across Nevis and Jamaica respectively. Tate and Lyle, founded by Henry Tate just after the compensation payouts, built their business on numerous sugar enterprises and plantations that had benefited from the compensation system. Mining companies Rio Tinto and BHP, both founded after the abolition to coincide with colonial settling and the new focus on labor exploitation and resource extraction, were both financed by bodies of direct investment capital from individuals whose wealth was derived from slavery plantations and large compensation payouts. Retailer Greene King, founded in 1799 by Benjamin Greene, owned plantations in Montserrat and St. Kitts. Greene received substantial amounts in direct compensation. The West India Dock Company, now part of Canary Wharf Group, established in 1799, was created specifically to handle trade from West Indian slave plantations and had many shareholders who received substantial compensation. Now, the British government, who did not have the astronomical £20 million sum available, were forced to borrow £15 million of it in a major loan from private bankers. The loan itself was arranged by two of the most powerful financiers in London, Nathan Meyer Rothschild and Moses Montefiore, who together represented two of the most prominent Jewish banking heritages. Their families also happened to be, joined by marriage, were called upon to issue the loan as government bonds and act as intermediaries, underwriting the bonds and managing public subscriptions. The government then paid interest on this debt through general taxation, resulting in repayments that took just shy of 2 centuries to clear. The £20 million compensation paid to slave owners under the 1833 Slavery Abolition Act remained the largest government payout in British history until the 2008 bankers' bailout, and it irreversibly reshaped the distribution of wealth in the UK's financial system. The open defrauding of the British taxpayer to award a morally decrepit minority of elites with exorbitant and undeserving wealth, it was this grandiose act of injustice that fabricated the fiscal bridge to progress Britain from a slave economy to an industrial empire, transferring wealth, deepening inequality, but also catalyzing major sectors of 19th century economic growth for a minority. But that's not all. There is an even more startling parallel that links the two events that some of you may have already noticed. Shockingly, at least 4 of the UK's major financial institutions benefited from not one, but both the slavery compensation payout and the more recent bankers' bailout. It seems in 175 years, one of the things understood by these banking institutions was that with enough lobbying influence and a convincing enough narrative, taxpayers' money can be gifted to private institutions, regardless of how deplorable their business practices might be. The Royal Bank of Scotland, Lloyds Bank, HSBC UK and Barclays, who each received billions in 2008, also received huge payouts directly and indirectly in slave compensation. Both events represent massive transfers of public resources to established wealthy institutions using unjust justifications about their economic necessity. It's important to remember that whilst the slave trade made the colonizing nations rich, it was the slavery compensation payouts that centuries ago granted many already rich individuals access to transformational and generational wealth.